As gold heads for 2,900, we see the silver chart going to that key 45.50 range, and there's a flagging target over there. So where did that come from? It's not just something we've conjured up, but that was your sort of your peak Wall Street silver bets from the lows of March 2020, that natural geometry that is generated technically by patterns, the amount of people that are prepared to capitulate and then later come back in and charge in, that is a demonstration of the force of the markets. How much money, how many dollars are they prepared to push it up? And that kind of force will be brought to bear again, projected from the lowest point, that gives you 45, which is how we typically do it.
Gold ticked up on Friday, buoyed by a slight retreat in the dollar, while investors hunkered down for more economic data next week to gauge the Federal Reserve's interest rate hike plans. The white metal trades just above the $22 mark, though it lacks bullish conviction and seems vulnerable to further weakening. Francis Hunt, the originator of the Hunt Volatility Funnel trading methodology, believes that as gold heads towards $2,900, silver could reach a key range of $45 to $50. He emphasizes that the geometry and natural patterns in the market, combined with the number of people willing to invest in silver and push its price higher, are indicative of market forces. This projection of reaching $45 is derived from the lows of March 2020 and reflects the potential force that the market can bring to bear. Silver, in his view, could be an attractive asset for wealth preservation, especially given its historical role as an industrial and monetary metal. Analyzing the silver price chart, Hunt highlights a pattern that resembles a head and shoulder formation. He acknowledges that while the diagram suggests a clear pattern, real-world market movements can be more complex. In this case, there have been deviations from the pattern due to market dynamics. However, the crucial point of interest is $26, representing a neckline and a critical breaking point. A move beyond this level could trigger a significant upward movement, possibly reaching $38. While acknowledging that the market may experience some downward trends, Hunt suggests that as long as silver remains above $22, it is in a favorable position. We will now bring you clips from Francis Hunt's interview with Liberty and Finance. But before we do, if you want more videos like this, hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Bringing you to the silver chart specifically, which I'd certainly say represents a value proposition at the moment, possibly one of a discount window, if you will, that's currently open and should probably be very well exploited if people are fancy protecting their wealth from all the other predatory aspects of the current financial system. But we've got on the silver price, we've drawn also here a pullback that represents a little bit of a head and shoulder. This is a simplification. You can see the price has deviated from this, and this is why people sometimes get a bit impatient. There's a diagram draw of a pattern, and then there's what happens in the real world. And many people, you'll hear them say the map is not the territory. It's a simplified version diagram of that territory. And until you're stumbling along the ground yourself, do you really realize that there's a marsh here and there's big rocks there, etc. So you can see even on the shoulders, you have quite a bit of zigging and zagging in here before you hammer it out. In fact, we're identifying that this layer was a secondary point of support apart from the head, which has been supported again on this shoulder so far. At least we are again in a bit of a down leg for silver at the moment, and some people may giving up hope. They're probably giving up hope if they are at just the last moment, because this represents real value on silver. If this holds and this does turn out to be the right shoulder, you'll likely be staircasing your way back up. And the seminal level that's really of interest is $26 on this particular pattern structure. So that will be a neckline, commonly known as where a breaking through a key level, and that will trigger a $38, because the second part of your question is, Francis, what if it does go down, the gold-silver ratio, and you do get some upside? Where are we talking? I'd certainly expect some degree of rest as we start to home in on the 40. Remember, this is a big time frame. I'm using 3-day here. It's a bit non-standard. It's kind of 60% of a week. I do that in purpose, but in actual fact, we've also indicated to you that as gold heads for 2,900, we see the silver chart going to that key 45.50 range. So if I were to refer to the slightly lower time frames, because people will be saying, but we're going down right now, what do we want to see? We want to see this level hold. You can see I'm highlighting the multitude of touches that was as a secondary support point. And that's in and around, let me make sure I get the value exactly right. It's in and around $22. So we can pull back and we're fine as long as we stay north of $22. And as over here on the shoulder, I highlight again, you came down, it wasn't over. You went up, you came down, it wasn't over. You went up, it came down again, it wasn't over. So when you tend to get this complexity and multitude of testing on one shoulder, it's often replicated again on the other. In other words, the market's telling you what kind of a guy it is. If I have a hairy left forearm, it's likely I have a hairy right forearm. And in the same way, we're going to get that little bit of, are we there yet? Are we there yet? And I think that's what precious metal investors are feeling right now. Are we there yet? You could go one or two more times, but at some point you're going to be back at that $26. And that's when things get really interesting. I'd expect that line to be broken with momentum normally as well. So it can move fast and through 26 by some degree.
Moving forward, Hunt highlights that the recent fluctuations in the silver market are closely tied to the gold-silver ratio, which has various applications beyond just measuring precious metals. The ratio ranged from 77:1 to 87:1 during this summer's trading. It got as high as 130:1 during the pandemic panic in 2020. Although the gold-to-silver ratio is well below its all-time high, it remains elevated historically. Since silver tends to be the more volatile of the two metals, amplifying gold's gains on the upside and gold's declines on the downside, relative strength in silver tends to be a bullish indicator for the entire precious metals complex. Hunt points to the technical analysis of the gold-silver ratio, emphasizing that it has reached a critical level that has been tested multiple times but has not yet broken decisively. When a significant level is repeatedly tested and eventually breaks with strong momentum, it often leads to a substantial move in the opposite direction. He suggests that a breakdown of the ratio could lead to a swift and potentially disorderly move, which he expects to push the ratio down to a level around 65. This shift would benefit silver significantly, causing it to outperform gold. Let's get back to the interview.
We have been talking that up recently, and the real reason is it's got a lot to do with the gold-silver ratio, which is an intrinsic one that we like for a number of reasons. It's also a great proxy for a little bit of a risk-on, risk-off field. It plays more than just the metals role. But here's the chart, and this is very typical of technical analysis at key levels. So our underarching opinion overall is that this is a very fundamental level that is of great interest. And many people say, oh, but you said it might be a triggering event, and now look, it's going up. We need it to go down. What's very common is that any level that is tested often and is rebuffed repeatedly, when it eventually breaks with real momentum. So nothing that is held really strongly for an extended period. When it eventually falls, you get a major run through, particularly over this period. You only need this to fail to the downside, and I would imagine that would be very disorderly. That will run us down to what we've referred to as that neckline at 65. And it'll be quite brutal and quite quick. And that could see quite an extensive upside move in overperformance out of silver, although gold will be doing very well too. But just that beta is going to really, really churn up. What you can notice, why is that? What you can notice is that the ability to rally away is getting lower and lower and lower. So assuming this doesn't run higher than this last high, you're actually talking about a continued aspect where the momentum away from the electric fence is getting, its ability to get away from it is reducing. And this is an exhausting activity. It's kind of like somebody who's caught in a trap and is getting ever more exhausted, and you're hunting them down, they're running and then resting, running and then resting, and you're tracking them. And each time the distance between when they're running and how far they need before they're resting again, and you can see from the feet marks in the sand that they're resting, you can realize they're tiring. And this is why I reuse phrases like exhaustiveness. And technically, this looks like a period of exhaustion. And the other implication is that you've got this real squeeze between these big blue lines that I'm making. I'll double them up, and the pink one. And that means something's going to give. So we'll quickly be proven incorrect, and we're okay with that. It's feedback. If we're incorrect and it breaks, smashes through, it would look something like that. Okay, let it happen. Our suspicion, however, on balance of probabilities, given the technical assessment, that's that broadening trumpet over there, and this is normally associated with continuation to the downside. Don't forget, we came all the way down historically from the 128 levels right the way down to the 65, which was our run that took gold to 2000 the first time. So overall, we're biasing to this side, and it will be abrupt. It will feel like it came out of nowhere. And so the warning to everybody is, whilst we're playing with this line and it's getting ever tighter, that, the ping pong ball is getting trapped between the bat as you're lowering it down. There's that kinetic energy and that tightening. It'll come out of nowhere and it'll move fast. And that's going to be a very beneficial period to be in silver particularly, but precious metals generally. So in relation to how much ground you covered in how short a time over there, think of it as a triangle. It's very much what the geometrists among you would say an isosceles triangle. Now the triangle is very different. That's how much time it's taken to get that rally through there. So it's very much the same triangle, only lying on its long side instead of standing on its short side. So what does that imply? It's an inherent loss of momentum. It's taken you far much more time to do far less work, where positive work is the rally to the upside. So inherently, it's clearly not got the momentum, and the blow-off remains the blow-off. So it's like a dead cat bounce part the way down in the tech stock environment in 2001. After, with the blow-off behind you, and you've sold off so much, and now you're getting a weak dead cat bounce, what comes next? Normally, you get the next level of selling that takes you into fresh lows. That's why I say, on balance of probabilities, the next major move, recognize we are getting a move to the upside short term now, but the next major move, once we break this line, if we are to break that line, will be to the downside rather. So I don't expect us to do this and then go bang and start making new highs. That would be a shock for me. It's not impossible, but that would be a shock.
Currently, silver is skirting perilously close to the lower boundary of a range that it has occupied for an extended period. While short-term fluctuations may be expected, maintaining levels above crucial support points reinforces the belief that silver can reach higher values. What are your thoughts on the future of the silver market? And do you see it as a valuable asset for your financial goals? Please share your thoughts in the comments section below. If you found this video informative, remember to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.